guys, what is going on? Welcome back to my Robinhood portfolio. Today I'd like to talk about swing trading. A lot of new viewers on the channel, new investors with Robinhood have been asking, what exactly is swing trading? And I've put out a number of videos prior to this one talking about how I've been doing my swing trades with Ford, but since there's been a lot of comments in the comment threads asking about swing trades, how I put in my limit buy, limit sell orders, I thought I'd do an update video, this time utilizing a different stock here, PSEC, PSEC, Prospect Capital, a great business development company that has a good dividend yield there, 12.787, but as a business development company, these are a little bit more risky than your traditional blue chip stock. So I've shied away from doing a lot of swing trading with this stock just because I don't necessarily want to hold this for the longer term. With Ford, if I can't get out of a particular day or swing trade, I'm more than happy to hold that long, and by long, I mean 1 to 2 years, if not longer. Prospect Capital, on the other hand, not sure I would want to do that. Very, very risky. If we take a look at the 5-year graph, you can see very large swings in the price of this stock. So this can be very, very volatile. And you can see here there's been quite a few drops in the price of the stock over a very short amount of time. So wouldn't necessarily recommend doing swing trading with this particular stock, but it's a great stock to demonstrate some of the fundamentals behind how I do my swing trades because of the price variability in the price of the stock. That's one of the key components. You want to pick a stock that does have some movement in the price. If the price of the stock were basically flatlined, you would not have any variability to put in your limit buys or limit sells above or below the trend line. So you need a stock that is a quality stock and that also has a little bit of variability so you can put in some price points with regards to limit buys and limit sells. And the other key component behind this type of trading is you want to know the stock very, very well. You want to analyze the stock for many, many months before you start jumping in and out of trades. Ford, for example, I have watched that stock for over a year, so I know that stock very well and some of the price variability with that stock. PSEC as well, but if you're jumping in, I would definitely encourage you to take a look at the stock over the longer term. In longer term, maybe even up to a year, but definitely over a few months time span, because the way I put in my limit buy, limit sell orders is not based off of technical analysis. So, well, first of all, let's kind of define some terms here. So day trading, as you guys know, is buying and selling of a stock on the same day. Swing trading is just kind of an iteration, an offshoot of that, where you basically aren't worried about jumping in and out of a stock very quickly. You can hold it for a number of days. So you can hold the stock overnight, or maybe you want to hold it for 3 or 4 days, or maybe even a week or two. Really wouldn't hold it any longer than that, but again, that's why I do my trades with Ford primarily, because if I can't get out of a trade, then I'll turn it into a longer term buy and hold strategy. So lots of different ways of doing this, but that's really what the terminology is. Day trade, buying and selling on the same day. Swing trade, you simply buy it and maybe hold it overnight or hold it a couple days before selling off. So it's a type of short-term trading, but not as aggressive as day trading. And as you guys know, day trading uses a lot of technical analysis. But the nice part about swing trading is you don't necessarily need to understand all of the minutia of technical analysis, all of the esoteric jargon they use, cup and handle and head and shoulders and reversal, so on and so forth. You can use another method which basically just analyzes the price trends and positions over a long period of time. So that's what I was emphasizing at the beginning of the discussion, is you need to really look at a stock over a longer period of time, really understand its price movements, and then you can jump in and do some great swing trades. And that's what I've done primarily with Ford, but I've also done with PSEC and a few other individual stocks as well. So swing trading using price trends. You can see here over the last week there's a lot of up and downs in this particular price of the stock. So you see some peaks here that have developed, and then you also see some troughs here, or low points, price points that have dipped down. And using some jargon from technical analysis, you can see that there's some support here and there's some resistance here for the most part. But again, we casually use those terms because they're not really the definitions of technical analysis. They're simply price points where you see there's reversals here, and then they're kind of trending up here, but then coming right back down. And if you understand the stock well, you can use those for putting in your limit buy, limit sell orders. So as you can see here, the price of this particular stock at these points here, 814, 813, 813 or so, 814, 815, 814, 815. So you can see here, you'd want to put a limit sell in just under 814, 815. So I'd put a limit sell in 813. Then you can do the same exact thing when you take a look at the troughs here, when the price starts dipping down. So we take a look here, it looks like 809, 809. So it really looks like they're supported 809, 808. So I'd put a limit buy in at maybe 810. So you don't have a lot of room to work with, 810 to 813. But that 3 cents, and given the price of the stock, you can jump in with 3 or 4,000, buy the stock, and when it dips down, you put your limit buys in, maybe put a limit buy in at 810. You buy the stock, and then you put your limit sell in at 813. You make 3 cents a share, which is not a lot. But the whole idea behind this is that you can do this repeatedly. Every few days, you can do another trade. So over the week, over the month, you make a very good income, but per individual trade, you don't make a lot of money. So it's kind of taking a lot of the risk out of investing. You don't want to necessarily buy a stock, for example, at $8 and wait till it gets to $16. That'd be more of a buy and hold, but then you have to ride that stock out over a long period of time. There can be a lot of things that could happen to the price of the stock that would trend it down. Yes, it could trend up as well, but swing trading is taking a little bit of the risk out of buying and holding a little bit more risky set of stocks. So again, we have our price points to put our limit buys in. We have our, or excuse me, down here, limit buys. We have our price points to put our limit sells in. So over time, that's what I want. So over time, you can see here, the stock does go up and down here. It's kind of trended out here. So you wouldn't want to be jumping in when there's large movements in the price of the stock. So that's why you want to take a look at the stock over a bit longer term. 3 months here as well. You can see a huge drop off in the price of the stock here. So you need to take that in consideration when doing a lot of these particular investment strategies. This particular one, since I followed the stock for quite some time, this is corresponding to a cut in the dividend. So you can see, if you know a little bit about this stock, a little bit about the price points, and you can see that again here, a huge reduction in the price of that stock there. Did rebound somewhat here, but that's all because of dividend cut in the price of the stock. So you need to know some of these extraneous factors when jumping in and out of a stock. So that's why I like to do analyzing the price trends and positions, knowing a little bit about the stock over a longer period of time. You can really take a lot of the risk out of doing some of these swing trades. And you can essentially do this for any stock. The stock simply needs to have a good volume. You can see this one here, 704,905, as well as the stock fairly well with regards to some of the more recent price trends in the price of a stock. So you can do this for any stock. But again, the stocks I've done this strategy with have been PSEC, and let's go over to Ford, because Ford's been a great stock for doing this strategy. I really haven't lost any money on any of my swing trades or day trades with Ford. You can see over the last month, let's go last week here. You can see over the last week it has been trending up here very nicely. The power behind the strategy is if the stock is trending up or down, you can utilize this particular strategy. So again, you can see here resistance here kind of changing into support here. Another technical analysis type of terminology, but you really don't need to know too much about that. You simply need to know what the price of the stock has been doing over the short term and long term. You can see over the last 3 months here some opportunities to jump into the stock here when it dips down, and then some opportunities to sell off here when it spikes up. So you want to put your limit buys in just a little bit above the dips here, so you're always confident that you can get in a trade, and then put your limit sells in just a little bit below the peaks, because you want to make sure that you can get out of a trade as well. So that is one way of doing swing trading. That's the simplest way of doing swing trading. That's the one that I normally do, but there's other ways you can do swing trading as well. If we go all the way back to PSEC here in my portfolio, there's another iteration of this where you simply sell half of the shares you buy. So for example, on this particular peak here, you would maybe buy 10 shares here, and then you would sell off 5. Then you buy another 10, sell off 5. So over time, you're increasing your holdings in a particular stock. That's a little bit better for a stock that you want to hold for the longer term. I've been doing that with Ford off and on. That's why I have a large proportion of Ford in my portfolio. But you can do that with any stock. You're just hoping that's a long-term hold stock. You don't want to be doing this for penny stocks. You don't want to be doing this even for a PSEC, for example, a stock that you would not want to hold longer term. So I hope all that makes sense. That's a really brief overview of what swing trading is. Again, swing trading, iteration of day trading in which you try to get in and out of a stock over a short amount of time. whether that's holding it just overnight or holding it a couple days or holding it a couple weeks, but you really don't hold it any longer than that. Otherwise, you can kind of convert those trades into a buy and hold strategy. Again, day trading is simply the same thing, only you do it over the same day. You know, and you never hold it overnight with a day trade. So, hope that makes sense. If there's any questions about anything I said there, anything to add to the discussion, please let me know. If there's anything I inadvertently said incorrectly, let me know as well. That's swing trading. That's what I've done a lot in my portfolio. As you guys know, I'm a big proponent of buy and hold strategy, especially for new investors who don't know a lot about the market. But after you analyze a stock over a period of time, swing trading is a great way of getting into doing some more hands-on management of your portfolio, getting in, buying and selling individual stocks. As you guys know, for new investors, I always encourage new investors to jump into some good large cap ETFs that have good market spread, that reduce your risk because of diversification. But after you know a little bit more about investing, after you've done some trades and you want to do some individual stock trades, swing trading is a great way of initially getting into the stock market and learning how to buy and sell stocks. Again, do this with quality stocks. Don't put all your money into every individual trade. Don't try to hit home runs with every one of your trades. Like my example pointed out here, I'm only making 3 or 4 cents per trade, so I'm making maybe 0.5% per trade. Normally, I'm not doing 10% trades, 20% trades. If you try to do that, you're going to lose money. That's just how the market works here. Risk equals reward. Yes, it's going to be more risky. Doing those bigger trades, you'll get a higher reward, yes, but doing smaller trades, a little bit smaller percentage return on each trade, you'll really reduce your risk. And it's all about managing risk when we talk about stock market investing. So don't want to make the video too long. So that's what swing trading is. Again, let me know if there's anything that was not described well or anything you'd like me to expand on. And kind of with that, I'll end the video. As always, if you guys enjoy my videos, feel free to like, share, and subscribe. Appreciate the support. As you guys know, I really appreciate the input. If there's any questions you guys have, any great stock investing strategies that you want reviewed, any individual stocks that you have questions about, please let me know. And if there's enough interest in any particular topic, I'll do a video about that topic. So again, hope you guys have a good trading week next week. It looks like there's going to be a very strong market. And until next video, we'll see you then.